Today's Coffee with Carrie, we're going to talk about the rise in digital mortgages. I found this really interesting chart I wanted to share with you guys. It's from the Mortgage Bankers Association, by banks. The thing that I found most important, now it's a little dated, it came out to show 2015, but listen to this. In 2008, large banks had 50% of the market share over mortgages. In 2015, 7 years later, only 24%. So, what does that mean? The non depository lenders, all these fintech companies that have digital mortgage processes, are taking over. Now, the non depository lenders have 48% of the market share. That means the big banks have lost 50% of their market share in 7 years. What that's going to look like in the next 7 years, if they lose 50 more percent of market share, they'll only have 12% of the market in mortgages. Now, community banks and credit unions, completely stagnant. Community banks at 22% and credit unions only at 6%. So, what does this mean? Consumers are shopping for mortgages online. 90% start the process off looking online at rates, comparing. Now that the home buyer is younger, 50% of the homes sold in 2017, 36 years old, under 36 years old. Average demographic, 44 years old. Everybody's going digitally, right? So you're going to apply for a loan online, you're going to get your pre-qual online. So how do you create a competitive advantage? The number one thing for competitive advantage that's rated the same within 2 percentage points of rate is customer experience. You're not just looking at the mortgage industry for customer experience, every customer experience is mattering. So these online lenders are having better customer experience. Why? Because of the technology, because they're open long hours, they're highly reachable, and the traditional banks are struggling because they've taken the loan officers out of the central and put into a centralized location, out of the branches, and the connectivity is not as good there. Big banks struggle with rolling out new technology. It's more archaic, and you have these fintech, these online non-depository lenders, your Quicken Loans, your Lending Tree, these guys that have invested millions and millions of dollars in the technology to make this process effortless. So if you're a big bank, if you're a community bank, if you're a credit union, you got to bet on experience. You got to bet on the ability to connect with this borrower in a time that's highly high touch environment, to be able to connect to them. Why? So you don't lose them to the next person in line. To learn more about digital mortgages, how to connect and increase your customer experience, we've got a great webinar coming up at the end of the month. Check out our website for more details. Digital mortgage growth, how to not be left in the dust, January 24th. Get the details.